So what are some misconceptions that people have about HELOCs?
The biggest thing I hear is, oh, I'm signing my life away. A feeling like, well, I did all this work and I paid off my home and now I'm racking it back up the debt again. You're already paying the debt. You already have the debt. Using your home is the smartest thing you can do. You know, it's your home. If you move, you just use some of the assets to pay it off.
Yeah.
It's not signing your life away.
Yeah.
Welcome to Lawrence Real and Local, Keeping It Real podcast presented to you by the Lawrence Board of Realtors. We're your go-to source for all things real estate in Lawrence, Kansas. I'm Lexie Haskin with Flint Mortgage.
And I'm Campbell Ragan with McGrew Real Estate. Together, we're here to make the journey to home ownership a breeze. Join us as we share insider insights, expert advice, and a dose of fun along the way.
Hello, this is Lawrence Real and Local, Keeping It Real podcast by the Lawrence Board of Realtors. I'm Lexie Haskin with Flint Mortgage.
And I'm Campbell Ragan with McGrew Real Estate.
And we're joined today with Secily Rees with Envista Federal Credit Union.
And today we are going to be talking about how to use HELOCs effectively, smart ways to tap into your home's equity.
Sorry, I'm laughing so much because I love Secily and she's been putting up with me this morning before the episode. So that's just kind of how it's going. Thank you for joining us, Secily.
Thank you so much for having me. I really appreciate being here.
Yeah.
So we have a HELOC master connoisseur joining us today.
We do.
Yes.
Do you want to give us a little bit of your background before you get started?
Sure. Well, of course, my name is Secily Rees. I have been with Envista a little over 8 years now, but been in the financial industry for about 12 to 13 in that range. Really enjoy what I do, super passionate about helping people. And in my hobby or free time, if that exists, I also love to do theater over at Theater Lawrence. I'm on the board there. I love to serve that community in the arts. Super passionate about improv comedy. I also do that over at Topeka Civic Theater and enjoy giving back and being involved with Lawrence Chamber. I'm the envoy chair for the ribbon cuttings, and so I help MC those ribbon cuttings and welcome those new businesses to Douglas County and the Chamber.
Awesome.
So with that improv and comedy, are you going to make this sound even more fun than it already is?
Yuck.
You can just...
I mean,
my gosh.
put me on the spot, but no.
Like, come on. Like, I have at least maybe something up my sleeve. But, well, why don't we just dive in? Like, what is a HELOC and how does it differ from a regular mortgage? Or maybe even say like a fixed version too.
Sure. So HELOC or home equity line of credit is basically a resource to tap into the equity that you've earned on your home. And so, we all hopefully pay our mortgage every month. We're paying that balance down. And as we're paying that down, we're gaining value within the home that is called equity. And you can basically use that equity to your advantage to do pretty much anything. So it's pretty much like an asset that you have that you can get cash out of.
Yeah. And a lot of people too don't think about the appreciation, and even if they have been paying down that mortgage, they think that that might only be the equity that they have. But then there's something that you can do and to show how much it's appreciated over that.
Right.
Yeah.
So I always tell people, like, especially this time of year, because you'll get your tax bill, which of course is taken care of usually by your mortgage service company. But when you get that and you see that it's likely increased, that's a good time to, I always tell people, pop on to Douglas County Appraisal website, double check the value that you see on that website, because that's a great tool right there. You can take that number and then subtract your first mortgage balance from that number and get a good idea of how much equity you have available. And that's when you can talk to someone like myself to see how much liquidity there is to that equity that you have researched.
Mm-hmm. So around how much value can people usually take out when it comes to this home equity line of credits?
Sure. So that's going to differ upon, which product that you're talking to, which financial institution. It all varies just a little bit. But generally, a safe place to think about is 80%. I know specifically at Envista, if circumstances are right, we can even go up to 95%.
That's awesome.
Yeah.
I haven't heard of that high. I have heard up to 90, but 95%, that's great.
Yeah. And of course, credit qualify and all that jazz.
Yeah, of course. Yeah, of course you have to credit qualify.
Yes. And, there has to be a purpose or need, because we're not just going to be like, oh, here, you have 95%, here's your money. It's going to be based on, factors like, are you using those funds to consolidate some credit card debt, or have you gone through a hardship? Do you need to pay some medical bills? Are you wanting to possibly even invest back into your home, or, get another property? It's your money. It's your prerogative to use those funds as you see fit, and a great opportunity to, use that to your advantage in consolidating. We can let those credit card balances kind of creep up on us, and we always have more money later. Oh, I'll pay it off later. I'll worry about that later. And it's, later is now.
Yeah.
And so it's a great opportunity now to use that equity to pay off those revolving accounts, get back on track. The nice thing that a lot of people don't know is you're not touching your first mortgage at all.
Yeah.
And so you keep that 3%. You keep that, 2.89 that you got lucky and got
locked in.
Yes. And so this gives a whole separate payment, separate line of credit, separate home equity loan. And so there's two types of home equity loans available: the HELOC, which is a home equity line of credit with a variable rate, very similar to a credit card, or there's a fixed second, which is a home equity loan, similar to like an auto loan or installment loan, where you have a set amount that you've borrowed, you have a fixed rate for the life of the loan, and a set monthly payment. A lot of times when people are using their equity to consolidate credit card debt, I will suggest the home equity loan, so that way they can be really focused on paying that down and seeing that really have a positive impact on their budget.
Yeah.
That makes sense.
And so kind of going back to the HELOC and different ways that you can use it, what are some other ways besides just consolidating debt or reinvesting in your home in medical bills that you've seen people use that for?
I've seen people use it for, a wedding, use it for a vacation, use it for travel. There's lots of different, it's pretty much just cash, because if you think about it, you're paying cash to pay down your mortgage balance. That equity is just sitting there in your home. And so, there's this fear of, well, I don't want the bank to own more. I don't want to, I want to own my own house. Yeah, that's great. And that's why we really try to be proactive in having that conversation with you and keeping that home equity loan or line in a reasonable area where you still own, 20% of your home. You're not maxing out that equity.
Yeah.
And so we really try to be mindful of that with people and have that conversation to not just say, oh, here you go. And do something that really helps them and is a benefit for them, not just stacking more debt on top of debt.
Yeah. I've even seen people use it to help pay for their kids' college.
100%.
Yeah. And, or even buy another property with it. And then they turn their primary into an investment and then continually grow with that. It's a great resource to be able to use.
100%. And you're paying for it. You earned it.
Yeah.
Yeah.
Very true. So do you guys follow up in regards to somebody saying, I'm going to use it for my wedding? Do you guys look into that and make sure that they're actually using the funds the way that they kind of approach it with you in the beginning?
No, we don't micromanage your asset. If it's something where you've spoken with us and, you would like us to do those payoffs on your behalf, or sometimes it is a requirement, if credit cards have gotten overwhelming, we're going to require, in maybe that circumstance, that we make sure those funds are going right to the place where they need to go. Yes. But other than that, it's really like, I might ask for my wedding invitation or see if I can bring a +1. But no, we're not going to micromanage your assets for you. Yeah.
Yeah. And also kind of talking about the consolidation of debt, people don't realize that their credit card interest rates are a lot higher.
Oh, they're insane.
Than what it would be to get a HELOC.
Right.
So, that's also something to consider. You could be paying way more in interest for your credit cards than you would be if you just got a HELOC and consolidated it.
Exactly. I've seen 29%. And the tricky thing is that on your credit card statements, it's not in an easy place to check and see what your rate is. Yeah. They put it like on the second page at the middle bottom near, page.
Fine print.
Yes, the fine print,
Yeah.
those areas. And so when I ask people, hey, do their research and see where you're at right now. This is what I can offer, see where you're at. We actually have really fun calculators on our Envista website that can actually help you, put that information in so you can really see a hard number of how much you'd be saving. But it's tricky. And some of them have annual fees.
Yeah.
So it's like, oh, you're paying $75 a year just to have this credit card in your pocket. You know, it's like, and then you pay it off and you're not aware of that annual fee and you just go on with your life. Well, you got the fee and you weren't aware that you needed to make a payment. And now, that has impacted your credit score.
Yeah.
And so I'm really proactive with people when we do those consolidations and doing the research to know which cards generally have that annual fee to give them a heads up and do a little plastic surgery once we get the everything consolidated for you. So
I'll admit this right now. There is one card that I don't use, but I just really love the feel of it. It is one of those thick, heavy cards, and my financial advisor, sorry, Annie, if you're listening to this, was like, Lexie, cut that card up. And I was like, I'm sorry, no. And my husband was like, Lexie, that does not make me feel good when you say that to our financial advisor. I was like, but it feels so good.
Those
It
marketing
feels so
people,
good in my
they
hands.
know how
I know,
to-
they know how to do it. It's Amazon. Amazon made this card. They know what
It's
they're
like
doing.
titanium or something, right?
Yeah,
like
I mean,
you have to
You might not even be able to cut it.
Yeah, I doubt I'll even be able to cut it, put it in the
You're gonna have
shredder,
to
whatever, but
burn it and get a welder out and just melt it.
I will say that I could technically take it out of my wallet and put it somewhere. So if I did want to hold it, then
Goodness.
I know that sounds ridiculous, but it does. It just feels
I'm
like
about
so
to
powerful.
cut it up for her.
It
Well,
sounds so. It feels
That
so
or
powerful.
pay your statement balance, and then you're never paying any interest.
There you go.
But
Yep.
it is at a zero balance. I just
Good job, Lexie.
I just like the
can't
feel
cut
of it. I just like the feel of it. I can't help it.
Yeah,
I
it's
really
tough.
can't. I know that sounds silly, and everybody's gonna be like, "This girl's crazy," but
Crazy in the best way.
crazy in the it's just the little things. It's the little things sometimes.
Well, you
So
ought to add metal to your other ones so you can. Actually, then they
Or
wouldn't
just
work.
glue
So
it
even
on
better.
top or something on the back. Yeah.
Paperweight.
Yeah. Okay, so how do interest rates on HELOCs compare to other types of loans?
Sure. So an interest rate on a HELOC, of course, is going to be a variable rate. We base that on the federal rate that they set. And then depending on your amortization schedule, that's how we calculate the rate at that time. If the feds have the rate go up a little bit, then of course we adjust that rate in tandem with them at the next quarter.
Awesome.
And so, after they either do the increase or hopefully the decrease, then we would notify you, let you know that your rate will be changing just a little bit. But it usually doesn't affect your monthly payment substantially. And so most of the people are like, that totally understand that. Every line of credit has a variable rate associated with that. So this is just in line with that. And if you are wanting like a quote of what those rates look like, definitely reach out to me or pop on our website and we'd be happy to share that information with you.
Yeah.
Awesome.
And when you're saying variable rate, you're talking about an adjustable rate mortgage. So it would go up and there would be different things like that, correct?
Well, this is going to be a HELOC.
A HELOC.
And so different than an adjustable rate mortgage, which is the ARM. This is in second position. And this is the variable rate based on the equity that you've decided to tap into for your home.
So how should homeowners determine how much equity they actually should tap into?
Well, that's going to be something that we have a conversation about when we sit down together for sure, because we want to help you make mindful decisions that are great for your budget and great for your lifestyle. Obviously we don't want to give you something that feels overwhelming or something that feels risky. We really want to work with you to find that sweet spot and still achieve your goals without, tapping into all the equity or, we also think kind of a little bit more long-term, like what's the plan for this after, the 5 years, are you going to continue to want to have this line of credit available? Or some people, contact me after, say, they have their home improvement project done and they go, okay, Secily, I don't want to have this, line of credit as a tempting thing to tap into to keep using and only paying down just a little bit. And so what we do at that time is we actually look into getting it into a fixed rate. And so we basically refinance that into a fixed second home equity loan where they have that fixed rate for the life of that term and the set monthly payment. And so you don't have to feel like, well, I'm getting this HELOC. It's just going to revolve forever. No, you can always come back to me. We can shuffle the cards and revisit your goals, revisit that monthly budget, and make those adjustments as we learn and grow together and have the, banking relationship that we fostered.
Yeah, because goals are constantly changing.
Right.
So, and every year looks different, and sometimes every month looks different too.
Right.
So.
Life throws us some crazy stuff.
They
and
do.
so it's always helpful to have someone you trust to reach out to in those times to, readjust the budget as life changes.
Yeah.
So I was going to say, so the 5 years is up. They still have X amount of money on their HELOC. Then what?
So usually if they've paid as agreed for that term of the draw period, we check in with you and see if that's something you want to continue to utilize, or if they want to go into a repayment period, then we simply, that then turns into basically, a fixed second type of product, and so you then have the set monthly payment. I usually like to check in with people and make sure that something hasn't changed, just to really tailor whatever they need to their situation.
Yeah.
So my question is, when you meet with them, what all do you look at? I mean, do you look at those credit card statements? Do you look at the bank accounts? What are you looking for them to bring in that meeting with you?
So in our first meeting, we are going to talk about your goals and what the intention is. And so if that's home improvement, we're going to discuss, have you talked to, a contractor yet? Have you talked to a remodeler about your project? Our process moves pretty quickly for most home equity lines or loans. Usually it's about 2 to 3 weeks to get those booked and funded. Sometimes it takes a little bit longer depending on certain factors, like, if you need to get me your tax returns and you haven't done them yet, because this is kind of the in-between time.
Oh, yeah.
Then, of course, it might take a little bit longer. But we're really going to work with you to ensure that we stay on that timeline to get your, home renovations done. The other great thing is that those home renovations and things like that, talk to your tax person, because some of those are have certain tax credits. And so that would be something to definitely consider. And the cool thing about doing those home improvement projects with people is that at the end of the day, your house is actually worth even more than we did the home equity line for. And so it's really satisfying. So that's the case when I would meet with someone about, investing back into their home. Another thing that I do is if they're wanting to use it for consolidation, I basically pull up their credit report and have that handy so we can go through line item by line item on that report, see what the balances are. I even, do a quick calculation of maybe what they're paying out right now and what the consolidation payment might look like and how much interest that is just going to save them. I mean, it's within the first couple months. It's like already like, I saved someone the other day. It was crazy. I saved them like $700 a month.
Wow.
Yeah.
And that was just them, kind of sticking their head in the sand and saying, well, I'll pay it off later. I'll get that bonus later. I'll tackle it, because a lot of people have a lot of embarrassment or shame around the fact that they've let their balances get so high. And I am the most unjudgmental person, because we all had to learn the hard way. It's like we didn't learn any of this in school. We all had to make errors and go, oops, and I guess I'll know better next time.
Yeah. And you help them learn that, how to fix it and how to go through that.
Yes. Or try to prevent it in the first place.
Too.
That's the bigger thing of like, I did that and it wasn't great.
Very fair.
And in that first appointment, I'm also, usually seeing and checking if they can bring in their verification documents at that time. Of course, we're going to put in the application based on what you tell us that you make and those details, et cetera. But we're always going to back that up by double checking, your last 2 years of W-2s, your last 2 years of tax returns, your 2 most recent pay stubs, your bank statement, ensuring that you have your home insurance set up correctly. And we just ask for proof of that. We ask for your first mortgage statement. And that sounds like a lot, but I think that's like 5 or 6 items really.
Yeah, in the grand scheme of things, it really isn't a lot. And
No.
if
Yeah,
you're
and-
saving $700 a month,
worth
I mean,
the
it's definitely
work.
It's worth it doing the bank
Yes.
homework.
Yeah,
Yeah.
That's what I always call it. I'm like, well, I have your bank homework for you. You're going to have to collect these items. But,
Yes.
I also try to be helpful in giving them, resources and like, just go to your HR person. They'll just email them to you and then you can forward that on to me, et cetera.
Yeah.
And so I really try to make it easy. And so if you can bring in those documents when we first meet, that is always, gold star.
It
we can just
streamlines
move.
it.
Yes,
Yeah.
we can move even faster and help you achieve your goals.
Awesome. Well,
So
What?
I was going to say, what are some misconceptions that people have about HELOCs?
I think the biggest thing I hear is, I'm signing my life away.
Yeah.
Like things like that, comments like that of feeling like, well, I did all this work and I paid off my home and now I'm racking it back up the debt again. And so just kind of that attitude, you're already paying the debt.
Yeah.
You already have the debt. Using your home is the smartest thing you can do. And so I really just like to flip that script with people and change their mindset. And then I want to be their cheerleader and help them, get them hyped up about saving that money.
Yeah.
Because that's so important because, it's your home. If you move, you just use some of the assets to pay it off.
Yeah.
It's not signing your life away.
yeah.
And I mean, if you have this asset, why not use it? You know what I mean?
To your
Instead of just having
advantage.
it all tied in together. And a lot of people just don't think of it like that.
Yeah.
Even having a first mortgage, people are so focused on, well, I'm almost done paying off my first mortgage. And then I'm kind of like, well, then you have to pay your taxes and insurance by yourself.
Yeah.
There's still things to come.
So keep
Yeah.
that 3%.
Well, I was going to say, and even
you
with
can.
the taxes and insurance, with a HELOC, you don't have a...
No, we don't have
yeah.
that tied up with a HELOC or a fixed second.
Yeah,
That's
so-
all on your first mortgage.
Yep.
And so it's nice to know that when you're getting that payment quote from me, you're really just getting the principal and interest amount or, the payment due. And with HELOCs, it's kind of nice because you're only responsible for how much you borrow.
Yeah.
And so like you can have a HELOC for $50K and only plan to utilize 10, 15
Yeah.
and have the rest for emergencies. We've
Yeah.
all seen what Mother Nature can do to our homes.
Yes.
And so having that lifeline, that line of credit that is there in those emergencies, I think is huge. And a lot of people wish they had set it up after they need it, if that makes
Yeah.
sense.
Yeah.
That makes sense. Well,
Wonderful.
I mean, are there situations where using HELOC would not be advisable?
I would say if you're going to move super soon, usually, there is a clause on there saying that you're going to live in the property for so long. So just talk to me or your trusted banker or financial person to ensure that, what you're doing isn't, violating something or something
Yeah.
like
Yeah.
that. But I don't really see a downfall to utilizing that asset that you've earned, just because you can use it and save so much
So much money.
money.
Yeah.
Yes. And not be bleeding out those credit cards every month.
So this might be a silly question. If you don't have a mortgage and you bought your home outright, can you still get a HELOC?
100%.
Okay.
Yeah. Because that just means you have 100% equity.
Gotcha.
And, credit unions and banks love it when, you own that full asset,
Yeah.
then we're lower on our risk as well.
Gotcha.
And so definitely you can still utilize that. I would, of course, explore all options because
Yeah.
what does a cash out refinance look like? Or,
Yeah.
just
There's
compare
different
apples
options
to
at that point.
yeah. And so I would just basically go over that information with you. I will say the nice thing about specifically our home equity loans and lines of credit is that we don't require a full appraisal. We actually have a system that pulls the most recent value based on current market trends and comparables. And we use the median value on that printout. Basically, it's called an AVM. And so that's really helpful in that timeline.
Yeah.
Because you're not waiting
For someone to go out
Yeah,
and get-
yeah.
yeah.
Or the cost of it even. I mean, those are like $500, $550, something like that. I mean, everything's going up.
Yeah.
And so it's really convenient for people, especially when, it can feel very like vulnerable, having someone come into your home and, trust me, they're not looking to see if you made the bed, but it can feel like they're, someone's coming into your house and judging and looking. And so I just really like that about our specific home equity products is that we don't require that. So you don't have to have that be part of the process. Exactly.
Yeah. And it does make it go a lot faster too, being able to use that and not have to wait for somebody to go out, get that scheduled, to get the report back. So it does definitely streamline the process.
Exactly.
So if you wanted to leave everybody with just one thing about HELOCs, what would you want to leave?
I would say, to someone, don't be afraid to save some money.
Yeah.
Don't let your pride or your the fact that you might be embarrassed of decisions that you made. We're not diving into what you spent the money on for your credit cards.
Yeah.
We just want to get you back on track. And I think the most important thing is whether you would go with me or anyone else, it's your comfort level. And you want to make sure that your financial, banker or trusted person, you really feel that connection with them and have that trust built from the beginning. We all have that intuition inside of us that says like, oh, this is a go, or, oh, think about this. And so I really help people when they talk to me, tap into that intuition because that's huge on any decision that you make,
Absolutely.
In your life at all. And so I think it's just really important to get over the fear, talk to someone you trust, and help build your confidence through the process so that way you can really achieve those goals.
Yeah.
Awesome.
Well, thank you so much for joining us, Secily. It's been great.
Yes.
And I'm really glad that you agreed to come on because you're a great resource.
Thank you so much. It's really fun, getting to do this. Like I said, I'm super passionate about it. I think I'm even going to be in talks with the Lawrence Public Library and partnering with some financial literacy courses and things like that. So I'm really excited for that in 2025 and just, to continue to get to work with lovely ladies like you.
Yeah.
Well, thank you very much. And thank you to the Lawrence Public Library for letting us use this space. I mean, it's amazing. We say it every episode, but just got to keep
They're
giving
such a
thanks.
resource.
They
Yes.
are. Yeah.
Well, okay. Signing out.
Thanks for joining us on Lawrence Real and Local, Keeping It Real podcast. We appreciate our guests taking the time to join us. Don't forget to subscribe and leave a review if you've enjoyed today's episode.
For more information, please visit us on the web at www.lawrencerealtor.com. And remember, whether you are buying, selling, or simply dreaming of your future home, we're here to help. Until next time, keep it real
And happy house hunting.